Hello, traders. It's Wednesday, January 12th, and we're about an hour and a half before the open. Let's see what the market's got in store for us. You know, from my last video, I recorded it 2 days ago. I was looking for market support. Please go back and watch that video. You need to validate that what I'm telling you actually happened in the video. At the 9-minute mark of the video, I was describing this pullback in the market and how this bounce told me that the low of the day was in and that I was looking for a higher low double bottom. You can see higher low, double bottom. And this price action told me that was going to be the case. Downward sloping trend line, broken to the upside, beautiful rally, leaving a bullish hammer on the daily chart. Let me spend one more minute on this because you can see how all of a sudden we're starting to get really nice organized buying pressure in here. I'd mentioned to you that when we test the 100-day moving average, we are not going to be there long. This is our opportunity to sell out of the money, bullish put spreads. I recommended adding 40% of your target allocation to out of the money bullish put spreads because I believe that the support level was in. Now, in all fairness, I did also mention in that video that we've seen these big drops, and on these gap and go formations, the market has had a tendency to flatline and compress. So I was not looking for that release, but once I got that downward sloping trend line, breach to the upside with a bullish 1OP cross, absolutely. We were all over that move. In fact, I was trading double size on the futures, had a fantastic day. Let's keep going forward on that 5-minute chart and let's see what happened yesterday. So yesterday, this is the opening formation yesterday. Let me go into the chat room and show you how I outlined the trade for our day traders. And you can see pre-open market comments. These are posted before the open each day. You can also find a link to my Twitter feed, 8:27, 3 minutes before the open. I'm painting a picture of how I see the day unfolding. Day traders should be fairly aggressive today. Had that nice bullish candle on the daily chart. So if we get long green candles stacked right out of the opening gate, this is one of those times when you can buy stupid because I'm looking for follow through to that bounce off the 100-day moving average. There's about a 20% chance of this actually unfolding. Another scenario that could unfold is that we have a flat open. 1OP on a bullish cross, so look for those green candles and be ready to buy in the first 30 minutes. This is one of those times when you want to be a fairly aggressive buyer, but you gotta wait for those stacked green candles. A gradual drift lower with mixed overlapping candles is our best scenario. About a 30% chance of that happening. This formation would give us weak trend strength on the downside, and there'd be a sign that there's support. And as we're probing for that support, this is our precious time. This is when we can find those stocks with relative strength, the stocks that are powering higher right out of the opening gate as the market is probing for support. That was the game plan. Here's what happened yesterday. We got our ultimate setup. Long red candle, little doji in here, and then instantly we get into these tails under body. Now we get a nice little bounce off of that. That tells me that there's support already forming. These tails under body, that long green candle, we have another retest, downward sloping trend line, and then we release off of that bullish 1OP cross that was early in here. That's why we need technical confirmation. That breach above that downward sloping trend line was the key. Now here you can see how tightly wound the price action was the rest of the day. All we did was just kind of drift higher and higher and higher. We did have a bullish divergence here on 1OP. You can see that was a bearish cross right in here. Let's talk about this candle. When you get a big rally like that, you get a long red candle. This is a bearish engulfing candle. It is a sign that there is some selling pressure. So you need to wait for that selling pressure to abate. We check the high. Ooh, we could have a double high lower double top lower high, so you have to be patient. Another long red candle in here, but eventually these red candles are gobbled up right away. When you get boom, a drop, and then you recover instantly. Boom, drop, instantly recover. That is simply a shakeout. Too many bullish speculators, too many weak hands, boom, we can shake them right out. And then once those weak hands have been shaken out, then the market gets into this gradual drift higher. Let's go into the daily chart. And here you can see there is the 200-day moving average, 100-day moving average, put the 50-day moving average up, did not even touch the 100-day moving average. Here you can see a similar formation. Look what happened in here. Remember the videos that I've given you over the course of the last 2 weeks? I have referenced this pattern, I don't know how many times. And I was referencing it because we were setting up for a dip. Tiny compressed candles, low volume, watch for a dip. Tiny compressed candles, watch for a dip. Tiny compressed candles, low volume, watch for the dip. When we get the dip, this is when swing traders need to jump in to action with both feet. These are your windows of opportunity for longer term swing traders. Watch my previous videos. You'll know that this is the setup we've been waiting for. We got it. Up here at the 50-day moving average, we put about 25% of our bullish put spreads on. In the last video, right here, this was still a red bar. I said put 40% of your bullish put spreads on any follow the next day, which would have been yesterday. Add to those positions because we will have the confirmation. That was the key. That's where we get aggressive. That was the key. That's where we get aggressive. You should be aggressively putting those bullish put spreads on. In the last video, I showed you at least 10 or 12 different stocks that I felt set up really well for selling out of the money bullish put spreads. Pete, you think the market's going up. How come we're not out there buying calls? You could buy calls. You could buy calls if you're a very short-term trader, but that means you're going to be taking overnight risk. So you want to be relatively passive, in my opinion, because we've started to see selling pressure. And this happened in November and December, a typically very, very bullish time of the year when you do not get these swift pullbacks. So we need to be a little bit more cautious because the market dictates our trading strategy. Market first, market first, market first. Make sure you are always getting your longer term market perspective. Selling out of the money bullish put spreads helps us distance ourselves from the action. You always want to make sure that you have major technical support. You want to sell the spread below that technical support so that if that support is violated, you can buy the spread back in. But you know that there should be buyers. This is where they're coming in and making a stand. Great time to sell out of the money bullish put spread. So we've got a CPI number coming out in about 20 minutes. I don't know how the CPI is going to come out, and I don't know what the reaction is going to be. I only know that the Fed has been talking about persistent inflation and that they may need to hike rates faster than they'd like if inflation is heating up. We got the jobs report. There was a 0.6% increase in hourly wages. That's the largest input cost for companies. So that's very inflationary. CPI and PPI have been coming out hot for months. Transitory inflation is a phrase that's been removed by the Fed because they see how persistent inflation is. So the CPI, I believe, could cause a little bit of nervousness early today. What does that mean for day traders? That means we could see a pullback on the open on that CPI number. You want to make sure, if you're a short-term day trader, that 50-day moving average is preserved. Keep your eye on the 50-day moving average. I believe it could be tested. I believe that will be a buying opportunity. So what we want to be looking for is we want to be looking for a sell-off, somewhat similar to this, where we probe for support, probe for support. Okay, we're seeing overlap candles, we're seeing mixed candles. That tells us the trend strength is not very good. We're looking for that confirmation. Either we pull back and get a bullish hammer, bullish engulf, and then a series of green candles, or perhaps we have to test that support a couple of times. But eventually, the market should rally. We've got earnings season coming up. Earnings should be extremely good. I do believe that Omicron is going to have an impact on those earnings. It's going to have an impact on economic growth, but the earnings should still be very solid. We don't have a Fed meeting for 2 weeks. That should give us a clear path and a nice solid bid to lean on. So until all the mega cap tech stocks have announced, which by the way, Apple, I believe, announces on the 27th of January. The FOMC statement is on the 26th. That is a very, 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 very important window because once the major tech companies have announced earnings, the air gets let out of the balloon. People who are looking to short, people who are looking to reduce risk will typically wait for those mega cap tech earnings to come out because they have been stellar. And the market has had a tendency to rally and hold its bid very well into those mega cap tech earnings. Well, once the air is let out of the balloon and then you get a splash of cold water from the Fed, we could see a nice little pullback. So if you've got your bullish put spreads on, you want to make sure that they're expiring before the earnings announcement. You want to make sure that you're staying inside of that 3-week window so that you can buy them back in, let time premium decay work in your favor, reduce some risk going into that FOMC statement, watch the mega cap tech earnings releases. That's how you should be playing it right now. So we're going to be taking a look at some bullish put spreads that should be setting up. I've got one search in particular. So just to reiterate what I'm looking for in the market, the one thing that we don't want to see today, long red candles stacked on the open consecutively, little to no overlap would be very, very bearish. We need to make sure that 50-day moving average holds if we see that type of pattern. I am not expecting it. I would put that scenario at 10% today. And you need to know what you're expecting the market to do. You saw in my pre-open market comments how I outlined different scenarios. This is the most likely one. This is the one I really hope we get because this is the one that we can be more aggressive with. Those are the types of things that you need to do before you even start your trading day, is to be able to get your technical levels, look at the price patterns on a longer term basis, look at the price patterns on a 5-minute chart, and get a sense for what you're looking for. Then you can put your game plan together. And as the market starts to unfold, you go, oh, okay, well, this scenario is playing out, and this is how I need to respond to it. Or this scenario is playing out, and this is how I need to respond to it. Sometimes you're going to be more passive, sometimes you're going to be more aggressive. So I don't like rushing in and doing trades on the open, by the way. I like to have that 30 to 45 minutes to evaluate the price action. There are times when you get those stacked long green candles consecutively when the market's at the low end of its range for the last 20, 30 days, and it's bouncing off of a major moving average like that 100-day, and then I get stacked green candles the next day. That is a gap and go. Yes, I will embrace that. So there are times, and you have to know what those scenarios are. But in general, I like to wait 30, 45 minutes, let the price action unfold, be able to take a look at which sectors are hot. We're seeing a lot of sector rotation, identify them, wait for the market to show you what it's going to do, then you can start taking those positions. That's how you get probability to line up in your favor. So today, I am looking for a little bit of a pullback, not a major pullback. That's my ideal situation. All of those mega cap tech names, Apple, Microsoft, Amazon, Google, they all tend to rally into the number. I have a search for that. So I believe that we're going to see support today. If you don't have all your bullish put spreads on and you've been holding some dry powder for the CPI number and reaction, you get that market pullback. You see that support today. We're above the 50-day moving average. Blam! Put them on. Watch for stocks with relative strength that have performed well recently. Upper right corner. That's the game plan for swing traders. Not going to talk too much about day trading because that's what I do in most of my videos. Swing traders, those windows of opportunity have been very, very brief. You get those tests of major moving averages, you got to be ready. Boom, hit it. So, going to go into a search, buy into earnings. This is an Option Stalker. By the way, I do all of my videos in Option Stalker. This is a proprietary software program that can be bought. I have links in the description area. This search looks for stocks that have tended to rally into the earnings announcement once they are inside of the 2-week window. Let me repeat that. These stocks rally into earnings once they are inside of that 2-week window before the earnings announcement. They've done so more than 75% of the time over the last 3 years. That's 12 quarters of data that we have. This is a tendency. This is just another statistical advantage that we can use. So I'm going to look at that search. These are your stocks. You can also see which stocks are on a buy signal from our proprietary trading system on a 5-minute, 15-minute, 30-minute basis. Expand the pane, you can see what they're doing on a 1 hour, 2 hour, 4 hour, and daily basis. So TSM looks pretty dang good. Not so much on a 5-minute basis, 4-hour basis, but all the others are green. As you look, you can see WFC, everything except for the 5-minute. This thing is all systems go. It's what we call a royal flush. So let's take a look at WFC right away. Look at that. You see how easy that was? It took me seconds to find that. Market has been selling off. What has this stock been doing? Rally, rally, rally mode. So this would be a nice candidate perhaps for day trading. As far as selling out of the money bullish put spreads, it will work, but you would need to be able to sell below that breakout right there. And you're not going to get a lot of premium at the 52.50 strike. So I would day trade it for sure, but I would prefer a stock that has maybe pulled back like this and is starting to show some signs of strength, downward sloping trend line, really nice long green candle through major moving averages, still within that striking distance of those major moving averages, meaning that I will be able to get a decent credit for this because the stock is still fairly close to those major technical support levels and it has not run. A stock like this has more chance of a pullback, and that could put me into peril on some of these bullish put spreads. So I'd rather be selling them down in here in this instance on the notion that at very least for the next 2 weeks, this stock should be dormant. That's the worst case scenario. It should be dormant. It shouldn't do a whole lot, and that bid should be strong into earnings. Well, that's all I really need if I'm selling out of the money bullish put spreads. I need time decay to work in my favor. So let's take a look at what we've got here for some of the other stocks. Now, you may not be able to go out and sell out of the money bullish put spreads with these stocks being inside of a 2-week window. In my last video, I showed you how to search for companies that are announcing 3 to 4 weeks out that still have this bullish tendency. But these are some of the stocks that you want to be watching and day trading right now. WFC, great example. Let's take a look at BX because it's got the green 5, 15, and 30. The stock is bouncing. You can see how it's through the halfway point of this long red candle. There's a downward sloping trend line that I would like to see it get through. So what do I do in this case? Click there, click there, click there. Whoops, I missed that first candle. I need to see that stock rally above that point or I'm not that interested in it. Yes, it's got a double bottom higher low, so I'm going to keep looking. Doesn't quite fit my parameters. I'd rather see better strength. Abbott is another stock that's on that list. And sorry about this. This recording software drives me nuts because every time I'm recording, the software slows down my computer to the point where I get these little timeouts. But Abbott is a pretty nice candidate here also because you can see tails under body. You can see that 50-day 50-day moving average coming into play at 132. We're still pretty close to it. Very nice upward momentum. I like this one. Nice breakout there. You can see another breakout right there at a higher level. If I can get down to that 50-day moving average at 132, and I don't have much time to sell an out of the money bullish put spread, but I'm not too far from that 50-day. You can see 135.70. Sell a 132, 131 bullish put spread for 20 cents. If it comes in, especially on any little dip today, yeah, I'd be all over that. Let's take a look at a couple of other stocks. These may set up better for day trading and very short-term swings. Call debit spreads into the number because we don't have a lot of time before those earnings announcements. Yes, Ally gets through that 200-day moving average. That could be a really nice trade. AMD had a nice bounce off the 100-day, still kind of looking for it to get through that downward sloping trend line in that 50-day. There's a nice one. AXP, still pretty close to the 170 strike. Financials reporting this week. This one comes out on 125, so you got at least one expiration, two expirations that you can sell. Yeah, I like that support right in there. That's pretty dang nice support. Upward sloping trend line, major moving averages. Sell it below the 100-day moving average. I like it. So let's shift gears. Shorter term trades, really, really good search. All of you that have Option Stalker, keep an eye on these stocks. These are going to be good ones, especially given that they like to rally into the earnings announcement. So now I've got to go into custom search. I'm going to have to go into Pop Bull to find something that might set up better for these swing trades that give us more time. So I'm going to go to January 31st as my starting date. That will give me 3 option expirations. Then I'm going to go into February for my next date. So these companies are going to announce earnings between January 31st and February 25th. So I've got time. And they have a tendency to rally into earnings announcements. Let's make sure that we've got some weekly options because I would prefer to have as many choices as possible. Option liquidity, we want to put that very high. And let's just see, let's cast a wide net. Okay, cast a wide net means lots of results in here. So this looks pretty dang good right now. We've got a lot of stocks to choose from. Well, what else might I want? Well, stock greater than prior day's high, given that the market rallied like mad yesterday, probably not going to give us a whole. We're going to see a lot of candidates. It's not going to narrow this list as I would like. So let's make sure that it's on a daily buy signal, or we can even go a little bit shorter term given that the market has pulled back recently. Let's make sure that it does have strength versus the S&P 500 on a daily basis. All right, now we're starting to get into less candidates. Let's see if anything yesterday had heavy volume. That would also be good. These would be candidates that we want to look at for possibly selling those out of the money bullish put spreads. As I look through the list, financial, AIG, energy's done really well. Energy, energy, basic materials, industrial, healthcare. Let's take a look at CVS. That's been on the list for a while. I like it. I think you could sell an out of the money bullish put spread below this 102 level right in here. It's a little hot, but look at how well it's held up when the market was pulling back. You could see that by overlaying the S&P 500. Market down, 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 stock treading water near its high. This stock wants to go. It's a great candidate. Upper right corner of the chart. That's where we want to be. So I'm going to go back and I want to see more candidates in here, quite honestly, because I want to be able to go through some other stocks. And in fact, there were some stocks yesterday that started to show some strength. And we're just going to go in and take a look at which stocks did not necessarily have heavy volume yesterday. And we'll take a new look at the list. I'd mentioned the big cap stocks. Amazon had a really nice bid yesterday. Just going through, taking a look. There's CVS again. Let's see what Google looks like. Google, horizontal support, 200-day moving average. Yeah, you could sell Google bullish put spread below that 200-day moving average. Now, notice Google all over the place. No real trend strength in this particular instance, given that it likes to rally into earnings, given that it's choppy, moving back and forth within this horizontal range, given that it is off of the bottom of that horizontal range. Yeah, Google will work here. You could sell an out-of-the-money bullish put spread keying off the 2670 level, and it's not too far from that, so you may be able to get a decent credit for that. Let's go back to our chart here. Take a look. By the way, I did not review my previous pick because I gave you like 10 of them because we're still focusing on selling out of the money bullish put spreads. Lyft, Nvidia, Pfizer, Twitter, Walmart. We're going to take a look at all these. I'm just going to click through some of the really big names that are going to have fantastic option liquidity, and we're just going to spot check. HPQ. Let's take this off. We don't need to have that. I hate obscuring my charts with a lot of technicals, and this is the SPY overlay. Look at that breakout right there above the $38 level. Sell that bullish put spread below the $38 level. Stock's at 39. You should be able to get a decent credit for that. HPQ. Love it. LYFT. Still weakness in there. Nice support in here. This one would be a little dicey for me. Lower right cornerish. So not one of my favorites. Bouncing, higher low double bottom, hugging that 100-day. Not crazy because of this big drop right in here. Retail stock. MOS, very nice. I like the fact that it was able to compress during the market sell-off here. Yes, if you can get below that $38 level. Remember, these stocks are going to be announcing in the next 3 to 4 weeks. So, and they like to rally into the number. Nvidia, downward sloping trend line. This is going to be drawn in because I love Nvidia. If it breaks through that 50-day, look at how it coincides with that downward sloping trend line at 300. Yeah, I'm going to be day trading the living heck out of that. If it breaks out above that, you betcha. If you're looking at charts and you see something that's lining up, there is a bullish flag formation. Click GTC, click the top of this candle right here, click the top of that candle there. Now, when Pfizer breaks out above it, I have a bullish flag formation. Hello, I'm going to be buying it. Set those alerts. Snap, no interest. Twitter, no interest. Walmart, nice. Upward sloping trend line, hovering around those major moving averages. If you can sell a bullish put spread below the 200-day moving average, you've got that upward sloping trend line and the 200-day moving average to lean on. Tick, tick, tick. Time decay, wasting away. Sell out of the money, bullish, put spreads, stocks, upper right hand corner, stocks that like to rally into the earnings announcement. That's the strategy. Any little pullback today on that CPI number is going to give you a window of opportunity. Look for some selling pressure after the number. Wait for market support. As soon as you know that that market support is there, wait for that 50-day moving average on the S&P 500 to be tested. Make sure that that support holds. When it does, start entering your bullish put spreads. Look for those trades while this process is happening so that you know when that support is in. Boom, 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 boom. You're in your trades. That's how we do it. And you want to be selling them on that retest and support because this is where the premiums are still high. Premiums are going to be less here. As soon as the market starts to lift off, they're going to drain the heck out of those premiums. Up here, going to drain it, going to drain it. You're not going to get anything. You're going to be scrambling looking for those trades, and you're going to be like, I can't get anything off. It's already moved away from me. That's why you need to plan right now. Should have been planning for the last week as we had the pullback, as I suggested, so you knew exactly where to look, exactly which spreads were in line. You can even use something called staged orders. You go in, you set the spread up, You can put it in staged orders in the trade screen, and then they're waiting to be executed at your price so that when that support is confirmed, click, 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 the trades are entered. Good luck with your trading, everybody. I hope to do a video tomorrow. I've been super busy with some projects I'm working on that you're going to be real excited about. I'll try and do a video tomorrow. If not, we'll see you Friday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.